Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In the last update we talked about the market's springtime run in the sun up towards 420, and boy, we are a stone's throw away from there. But what about those storm clouds? We also said in the last recording that Bitcoin was ready to break out, and it did. And gold finally breaks out. We've been waiting for this for quite a while. So let's get to the chart. At the time of this recording, it is late in the evening on Saturday night, so the futures market is currently closed. Looking at the chart of the SPY, we had a pretty nice doji there on Friday, expiration Friday, which that's something to talk about because when we look at the volume, you can see that we've been marching up kind of a little more vertical than I would like. I'll talk about that more in a minute as well, but the move to the upside has been on well below average volume until Friday. So we have a higher than average volume doji. What does that mean? Well, it was expiration Friday, so it could be attributed to that. However, when you look at this angle to the upside, we've been moving more vertical than I like. If you listen to any of these recordings, you know I like a 45-degree angle. Get a little bit more nervous when things go vertical because what vertically goes up quite often comes vertically back down. And we still have this gap back here at the 61.8% fib extension. So we are awfully close to 420. So that's the top from that zigzag pattern that we've been talking about for months and months. We are literally a stone's throw away. And then the zigzag that we identified a couple recordings ago has 161.8% extension at 426. So we're not too far from there. So there's a lot of resistance between 420 and 426. So I mentioned in the intro, what about the storm clouds? Well, I live in Florida and we have cumulus clouds. There's cumulus clouds everywhere, but the cumulus clouds in Florida, there's 4 different variations, but one of them turns into thunderstorms. Actually, a couple of them do. And I think that what's going on in the market may be heading towards a thunderstorm as well. I said in the last recording that I would really like a short position if the market ran straight to 420 without a correction. Well, considering the fact that we're so close there, I think a short position is something that would be prudent for anyone to put into their portfolio. Even if the market goes higher, it's still prudent to add some protection with the vertical nature of this move, these smaller bars, the fact that the majority of the move has been on lower volume, and the fact that we have a lot of fib resistance not too far away. So I think those storm clouds are building. Bitcoin. In the last recording, we said Bitcoin looked poised to break out. Well, here's the chart. This is where we were. So we had the big wave 5 pattern. We had a nice zigzag pattern with an extension, 100% extension up just below 72. And we had this symmetrical triangle. Well, here's what happened. Boom. We broke out of that symmetrical triangle, and now we've come back and we're testing the 61.8% extension. That's pretty normal following a breakout. So Bitcoin looks like if this is a successful test, it could be ready to move up and hit that 100% extension up there just below 72,000. But really nice breakout from the symmetrical triangle. One of the things we look for is once we have a breakout day, we need that confirmation day, the second day. And we got that. So the fact that we're coming down and testing this fib level looks completely normal at this point in time. We also talked about in the last recording how interest rates had cooled off a bit, and you look at that DMI. This is why the DMI is one of our favorite confirming indicators, along with Elliott Wave, is the fact that it's pretty doggone good. So the ADX got extended, showed that the strongest part of the move was likely over, and then the 10-year went into a bit of a triangle. We talked about the 30-year in a triangle in the last recording, but here we are, and you can see that the ADX is heading down, and boom, we broke out of the triangle to the downside. We're back testing that lower trend line following Friday's close, but that's why the DMI is so reliable. The ADX was signaling the strongest part of the move was over, and it was, at least for now. But we now have a labeled wave 4, only a 20% fib correction though, so that's not enough yet. And then we look at the 30-year, same thing. Here's where we were in the last recording, and boom, broke to the downside here. Now this one we do have a 25% correction with the labeled wave 4, so that hits that 23.6% level from a Fibonacci standpoint. But it just seems like with the fact that also the ADX diving down, interest rates may stay calm for a bit. But what about the dollar? In the last recording, we talked about how the dollar had come down and it was normal for once 100% extension is reached, which this zigzag pattern within the wave 3 hit the 100% extension, completely normal for whatever security to come back, test the previous fib level before moving to the extended C level. Well, in the case of the dollar, it had come down to the 38.2% level, so further down than it needed to if it was going to turn and move back up to the upside. But watch what's happened in the dollar since then. Boom. There's a 38% dead on that fib level, 38.2% fib level. So we labeled the wave 4, and we speculated that that could possibly be happening, labeling the wave 4 for a potential move higher, but sideways. A little bit lower, down to 44%, and now the entire Elliott Wave pattern has relabeled and it's gone. So we're not in a 5-wave pattern to the upside. So the dollar is weakening, and based on the Elliott Wave pattern, looks like it's going to stay a bit weaker for a while. I'm interested in your thoughts. Post a comment. What do you think the weaker dollar means? Does it mean that the economy is going to weaken, or is this bullish for the market because all countries are trying to rush to devalue their currency anyway? So if the dollar is not going to strengthen anymore, or at least not for a while, could that be good for the market? Could that be good for the economy? So what's it signaling? It's pretty interesting. Had some requests to look at oil, so I thought I'd go ahead and show you a chart of oil. We looked at this in our Tuesday night Trade Finder webinar. And by the way, I'd like to invite you, if you've not attended them, it's free. Show up Tuesday night and we talk about the markets. We look for trade opportunities. Usually people will give us our favorite stocks and we look at what our indicators say about them, etc. So I invite you to join next Tuesday night. So we talked about oil and how oil had consolidated in this triangle and broken out. So there's where oil is breaking out of the triangle. That's not going to feel too good at the gas pump if it continues to move higher. Also had a request to look at the Qs. So let's look at the triple Qs. Also had a really nice triangle, which they've broken out of. So now what happens? Notice that the Qs are labeled in a wave 3. That's interesting because if we come back and look at the SPY, it's still labeled in a wave 5. Talked about some of those concerning things, the vertical nature of the move, low volume, etc. However, when you look at the DMI looks pretty good. You can see the positive directional indicator is moving higher, the negative is moving lower, the ADX is right between them, moving up towards 30. It shows that there's possibly some strength for the continued move higher. Could that wave 5 relabel to a wave 3? It would really surprise me if the market moved up to the 261.8% fib extension. It's possible, however, but I still think being prudent and protecting the downside is a smart thing to do at this point in time. But looking at the Qs, let's bring the DMI on there. And you can see it doesn't look bad. Not quite as good as the SPY, but that doesn't look bad either. But remember, with a wave 3, you create a wave 4 at some point in time. So when is that corrective move going to happen? Based on Elliott Wave triangles, when you get a breakout move, at some point you retrace that breakout. So it comes back and it tests the point of the breakout. It's the same thing as with a gap, however. We know the gaps are going to get filled, we don't know when. Same thing with the retracement and the breakout of a triangle. But it's interesting that the Qs look stronger than the SPY. And also in the intro, I mentioned gold finally broke out. We've been waiting for it for a couple months to see if it could break above this 165 level. But when we add the 10-day moving average there, you can see that, all right, we're a bit overbought. So wouldn't be surprising to see gold come back, maybe test that 165 level. You can see that was resistance going all the way back to May and June of last year. So let's see if it can test this, have a successful test. The 10-day is crossing the 30. A lot of people look at that as a bullish signal. We're above the 50-day moving average. So we've broken above resistance and all the major moving averages. So gold looks good as far as a continued move higher. Only question is, do we need to test that 165 breakout first? And then last but not least, we always look at the VIX, and the VIX has moved to the downside. We talked in the last recording how we finally closed that gap. We continue to move lower. Are we going to head back down to that 12 level that we've been at for quite some time? I don't know. We'll have to see. So if you like this video, please hit the like button, or better yet, hit subscribe, and you'll be notified immediately when one of these recordings is posted. We do appreciate it. Thanks for your time. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.